Hello traders, and welcome to NOFT's weekly trade highlight. In a moment, you'll see us recreate one of the best trades of the week with NOFT's order flow and market profiling tools, along with detailed trade commentary and NOFT trade tactics. Our weekly trade highlight is brought to you by our head trader Troy Epperson, who in between assisting traders and taking the next step in their careers, provides weekly and daily guidance in our live trading room every single day. Before we get into this week's highlighted trade, we need to remind you that trading does carry significant risk, and all information in this video is just provided for educational purposes only and is not an offer or recommendation to trade future stocks, options, or forex. From everyone here at NOFT, good hunting out there and happy trading. Here's Troy. Hello traders, I'm stepping in for Troy once again to highlight that trade of the week for this week. The trade we're going to go ahead and highlight today is going to be a crude oil. It's going to be the low on February 7th here. So February 7th in crude oil, here it is on a 15-minute chart next to the static volume profile and the volume at price chart. You're going to notice that February 7th low. So let's go ahead and jump into order flow here and highlight this trade. Coming into this trade is pretty negative days, as you saw on the chart here. And coming into this level, we're getting towards the afternoon here. And you saw this beautiful exhaustion bar here. An exhaustion bar is when sellers come in at a high clip, and they come in very aggressively to try to push the market lower. They come in so aggressively that they can't simply maintain that momentum. And you see these red numbers coming in here. These are sellers executing orders. These aren't orders parked into the market. These are executed live orders coming into the market. So when you see these red numbers, they're coming in pretty heavily here into the market, giving you an exhaustion bar, which we highlight with the double bar, so you don't have to guess. You can see right away that this is an exhaustion bar. It's coming into a level that we have here. It's called the VRL. These are also called trainer levels. These are levels that are highlighted on our head trader Troy's chart, and he'll find these levels, and if he adjusts these levels just by a tick or two ticks, instantly it gets adjusted on our chart here as well. So we know exactly areas he's looking at, areas of interest on the chart for him as well. So we see this blue level here. It's coming into this level. We look at our histogram on the side. This is our volume profile for volume at price on the day. We see that we are below volume. We're at a trade level, and we're getting exhaustive activity coming from the sellers. So we're having all the ingredients of a good trade here at this point. We see these green blocks here, which means that as price is going down, sellers are coming out. Once again, price is coming down and sellers are coming out, indicating a possible buying opportunity, possible reversal here in the market. You see these gray blocks here. These are called COTs, or these are the highest volume point within a candle. So these are just regular candlesticks that are just blown up here. So we see trade is going into this VRL, rejecting off it pretty well. It's a hammer bar, a traditional candlestick analysis. Again, this is a crude oil 3-minute chart, so just a 3-minute bar here. But you can see that really good price rejection here in the candlestick. We call this the naked COT just because it is outside of the body of the candle. So it is just, you see a volume of activity at the bottom of this candle, and then the open and close is well above it. So again, all the ingredients of a good reversal here, and we start to see right away that the trade starts to move up here. Now, if you miss this reversal, there's a good opportunity for a second entry. When you see all these buyers really starting to flood into the market. Again, this is a little bit exhaustive activity, so we expect a little bit of a pause in the market. So we get some exhaustive activity from the buyers here at this point with all these blue numbers coming into the market. And we see a little bit of retracement. So if you come into the footprint here, you're going to notice that there is these stack of blue numbers here, and there's a red number there as well. This is a high volume area. It's just a very, very short term high volume area in the market. And many times price will get attracted like a magnet back to this high volume. And you can go ahead and park an order right there in the market. And in this case, if you didn't get this signal here, this is a great opportunity for a second entry to go ahead and get into this market. So as trade moves higher, this is highlighting this trade because this one was fairly easy to manage. Buyers were in control all throughout this candle. If you got your fill here, you're risking it to the lows here. Your 1-to-1 risk reward is right in here towards the top of this candle. And you can see here we got, you could have got at least 3 3R here, or three times your risk here in this trade. But as you can see here, as we move forward, again, these blue numbers are buying balances, just aggressive buying opportunity in the market, and that's exactly what we're looking for. This is what we're trying to track within the footprint, is who's controlling, who's being aggressive in this market, who wants this market. And you can definitely see the buyers want this market a lot more than the sellers. So you see these blue numbers start to come in here. It's buyer aggression, closing at the highs. Next candle, even more. You have 4 of these areas of buyer aggression, 4 imbalances in this market. No sell imbalances at all, no red numbers here. The COTs in the middle position, everything is looking pretty good. Go to the next candle, closing near the highs here again. Buyers coming in. You see this green number here, 995 delta. That means that this bar, when you add up all the orders in here, the buyers are winning by 995 orders here. Pretty big number in comparison to the numbers around it. 427, 394. Buyers are still winning, but buyers are still in here pretty strong. We're right back in value here at this point. See, it's a little bit orange. Go to the next candle. Now we're getting a little bit of selling coming in place here. Some price rejection. You have a red number coming in here. But you have buyers still present here in this market. You're not breaking any lows. This trade, again, still fairly easy to manage. This would certainly be a slight cause for concern, but we get right back to it in the next candle. Again, this one was really easy to manage here. Then we get right up into this brown level here. This brown level is an institutional trade level. When institutions are coming in with volume, or if we're able to track volume, blocks of volume coming into the market, you'll see this brown level highlighted. There's one here, there's another one here, and there's another one down here. There are times where trade will certainly get snagged into these institutional levels, and we also have the POC of the day. That's this blue line here. As you can see from the histogram, this is the highest volume point in the day so far. So you have a confluence of the highest volume point on the day, and you also have the institutional trade level, and you can see right away trade is just getting snagged around this area. You still see a lot of buying taking place here, but you can certainly see that it's going side to side. You have a little bit of two-sidedness here. No problem with you taking profit in this area here. Let's go ahead and see how this shaked out. So you can see as we go along here, you're starting to see these red numbers starting to come into the market. You're starting to see the delta at the top here starts to turn a little bit negative. Look at this negative delta here. So we actually we covered the trade in here, but even if you held it a little bit longer, you certainly got confirmation that sellers were present here in the market, and yeah, you can start to see it turn down here. So great trade. We're outside of value. We traded right back into value, into the POC, got snagged around the POC, and we started trading off here. So this is a great trade, really really easy to manage this one when you're following the footprint and you're following order flow. So we hope you enjoyed our trade of the week. Please visit us at www.noft-traders.com. We hope you have a great weekend, and we look forward to seeing you next week.